Hello, everyone, and welcome to this edition of the Hoard's Dairyman webinar series. Today's webinar is brought to you by Total Farm Marketing. Total Farm Marketing's family of companies helps farmers manage commodity price volatility with comprehensive strategies and recommendations that span a producer's operation. Total Farm Marketing offers two services to help dairy farmers optimize operations. TFM 360, a product of Stewart-Peterson Inc, is an AI-powered rules-based system that provides data-driven recommendations for managing price risk on milk, feed, and fuel. Dairy Revenue Protection Insurance, offered through SP Risk Services LLC, secures a safety net against market downturns. Futures and options involve risk and are not suitable for everyone. SP Risk Services LLC is an insurance agency and an equal opportunity provider. Now we welcome Brad Peterson, Vice President of Sales for Total Farm Marketing. Brad lives up to his pedigree, which includes successful farmers and business entrepreneurs with a deep love of agriculture. Brad understands the challenges that farmers face and uses that knowledge to help farmers and the companies that serve them find the right farm marketing solution for their operation. Brad has been part of the Total Farm Marketing team since 2014. And with that, Brad, I'll let you take it from here.
Sounds good. Thank you, Sam. All right. Well, good afternoon, everyone. Appreciate you guys hopping on and spending a little time with us here. Really, the goal for today is pretty simple. We want to walk through the dairy markets first of all, and then also spend a little time talking about specifically dairy revenue insurance, as well as a discussion around AI technology and proactive planning and how that helps with marketing. I'll also make sure that we answer any questions that come my way. So hopefully this will be an engaging format. Please send over questions as you have them. I don't think Sam mentioned it, but there is either a chat function or a Q&A section on the GoToWebinar toolbar. So take a look for that. And again, fire over questions as you have them, and we'll tackle those at the end of the presentation. So again, thanks for joining us. As Sam mentioned, Brad Peterson, VP of Sales at Total Farm Marketing. I've been here about 13 years now. Look forward to chatting with you. That being said, I'd like to start by showing a disclaimer slide. Anytime you talk about tools like futures and options, it's really important to remember that there is risk with these tools, and you should consider if they're appropriate for you and your operation. So as we transition to the official start of the presentation, I am going to hop off camera for now, and then I'll come back on at the end for the Q&A section, just so you guys can focus on the slides themselves. All right, so let's start. Before we really get going, I want to give you a quick history on Total Farm Marketing by Stewart-Peterson and explain why we do what we do. For me personally, I do this because I grew up in a farming family. I saw the joys of farming, as well as, frankly, the struggles of farming firsthand. Many of those struggles were related to finances and market fluctuations. So I want to help farmers manage that struggle, and that's why I do what I do and why we exist as a company today. We've been in business for 40 years now. This is actually our 40th anniversary. Scott Stewart started the company with the goal to provide farmers the best marketing recommendations and service that they could get. And even to this day, he's still actively involved in pushing us as a company to improve. We work with thousands of farmers all throughout the country. So again, we're founded on that legacy of trust with our customers and with the farming community. It's really important, though, that you know that as I talk today, you're going to hear me talk about our publishing company, Stewart-Peterson Inc., as well as our brokerage firm, Stewart-Peterson Group Inc., and you'll also hear me talk about our insurance agency, which is SP Risk Services LLC. You'll see those listed on the slide here. Finally, we pride ourselves on doing business the right way. We want to get to know our customers, their operations, and ultimately be the best partner that we can be to help them succeed. We really care about our customers. We always say we want our kids to be caring for your kids' kids in the future. So we have a vested interest in seeing you and your family succeed. Ultimately, that's what it is for us. Be a good partner, help you guys succeed. I want to start with the slide talking about our renewal rate. You'll see the number here, 94%. That's actually our renewal rate on our TFM 360 service, as of the end of March. So March 31st, 25 here. In my opinion, that's an impressive number and a number that I want you to think about and remember as we're talking throughout this webinar here. I think we've always been very good at what we do, and I'll show you that a little bit more in a bit here, but it's important to know that we don't rest on our laurels. We're always taking the opportunity to lead the industry in this space the best that we're able to. So about 5 years ago, we made a fundamental shift in the way that our team analyzes the markets, and we installed a formal rules-based approach to farm marketing for dairies. Now, this proprietary approach is through our publishing company. No one else has what we've built. It uses AI technology, specifically a process called systemized ordered thinking, with thousands of lines of code, and conducts hundreds of tests to eliminate conscious and unconscious bias, ultimately allowing us to recommend what we feel are the best possible recommendations that we can put out there. We'll talk about that more deeply when we get to the different companies that we operate, but you still have the option of working with an advisor, so it's not just AI technology. That advisor is part of a team to customize the recommendations to meet the needs of you and your farm, and that's actually through our brokerage company. So we're going to continue to improve on that approach in the coming months and years. Never resting on our laurels is a real big focus for us. Constant improvement. I think that's the case in the dairy industry, no matter what you're talking about, whether it's production, marketing, just best practices. So always looking to improve. So let's take a look at the next slide, and I want to outline for you what the impact could be for an average size dairy farm. So we'll take a look at that now. And again, this is really important to know that we are very proactive and transparent with our recommendations. And I think our customers have come to expect that. I think it's really important. Along those lines, as you're thinking about transparency, and I'll get to these numbers in a second here, but if you can't easily be provided a history of recommendations from your current advisor, I'd ask yourself why that is. Why can't you easily track what the impact has been on your farm? So I think that's really important. So consider that as we talk through these numbers as well. So what I have here is base recommendations that would show the potential impact on XYZ dairy is what I named the dairy. And XYZ dairy is just a typical 2,000 cow dairy for this hypothetical example. And the reason I want to show you this is I don't know exactly what your history of marketing looks like and what you did on your farm, so I can't compare to that. But what I can do is compare to a farm that does no risk management. They simply take the market price on milk, the market price on feed corn, soybean meal or protein, as well as on fuel. So we can compare to that with what our base recommendations have looked like. So taking that base level that I set there, for somebody who's just open to the market, and comparing that to someone who followed our recommendations from our publishing company perfectly for the past 5 years, here's what that impact would have looked like. And again, this is from 2020 through 2024. And that's the year, again, 2020 is the year we rolled out our rules-based approach. That's why I wanted to start with that year. So a few important things to note here. I want to highlight in the lower right-hand corner here the total net benefit in hundredweights over that time. That is at 49.2 cents per hundredweight on average per year. So just about 50 cents per hundredweight. Okay. And that net benefit is after our publishing fee is taken out. Okay. So that's a net benefit number on average per farm. But I do want to highlight that not all years are the same. So it isn't consistently 49.2 cents, right? But rather, how do you proactively manage risk and what does that look like? So for example, in 2024, if we look at this line, the bottom line here on the left-hand side, if you think back to 2024, really anyone who did risk management proactively, whether that be on milk or on feed, was behind the market for the most part. And that's because throughout the 2024 calendar year, milk prices rallied pretty consistently. And on the feed side, feed prices for the most part, they fell consistently throughout the year. And you can see that reflected here. Milk moved $9 in 2024 alone. And you can see that our base recommendation ended up 20 cents behind the market for the year. Okay. Again, I think that it's important to show you that because you don't always come out ahead in terms of positive net gain in marketing. But at the same time, to survive a $9 swing in milk prices and be 20 cents behind the market, again, I think that's something that we can live with and be fairly happy with. So if you take a look again, 2024, the gross benefit, I'll actually go all the way to the right here. Net benefit was negative 56 cents per hundredweight. The year before that was positive $1.75, almost $1.76 per hundredweight. Okay, and I wanted to be real clear with that. So again, there's highs and lows. But what this really does is it highlights how one can manage risk proactively over time. Okay, again, the net number over those 5 years combined, a positive 49.2 cents per hundredweight based on this hypothetical 2,000 cow dairy on average over those 5 years. One final note, this chart does not include any commissions or fees through the broker if you choose to work with any broker, is I don't know what those fees would be and they vary broker to broker. So important to know that this does not include those commissions and fees. So now that we've talked about what recommendations would have looked like, let's talk about how the service is actually delivered and what you can expect from us. One goal with TFM 360 is to bridge the time gap and what is needed and required to do all the data and trend analysis, math modeling, probability processes, develop strategies and contingency plans, and put into action along with helping to take the emotion out of marketing. It's a process that puts the focus on what is most important to your success in farming, and that's managing your revenue. So there's a lot of different components available to help you. And you see I've got 3 different, I'm going to call them buckets or columns here to take a look at. TFM 360 is actually a service of Stewart-Peterson Inc. That's what we're looking at in the left-hand column here. And that drives the dairy marketing recommendations. Remember, that includes milk, feed, fuel, and cull cattle. Okay, you pay an annual fee for that subscription to the publishing company. You get communicated to via email, video, and text messages. You get access to our customer portal. And we'll talk more about that in a moment here. In the middle column, Stewart-Peterson Group Inc. is our brokerage company. This is where you have the option to be assigned an advisor to work with to help you one-on-one to customize strategies to your specific farm. And if you'd like, they can help you transact futures and options strategies. It's important to know that you do not need to be a customer of our brokerage firm to be a customer of our publishing company. And also another important note, the consultants that make up this team, they're salaried employees with no incentive to use one tool over another. The last column I want to cover is the right-hand column here. SP Risk Services, that is our insurance agency. And again, that's another optional service where agents can provide DRP recommendations and also write endorsements for you. Again, we have our own agency to do that. Not required to be part of our TFM 360 service, but again, it's an optional service that you can consider. So what I want to do now is just dive deeper into each one of these pieces of the service to give you a feel for what our customers receive and what that actually looks like. So TFM 360. TFM 360, as I mentioned, is from our publishing company, Stewart-Peterson Inc. And that's where we create the market recommendations using the AI and the rules-based approach. And then we publish those recommendations to our customers. Like I said, these recommendations are delivered in various formats, including email, text, and video. So let's dive deeper into the rules-based model and our use of AI technology. I know that was one of the things that we promoted heading into this webinar was AI technology. So we've been working on this as a company for years now, but a few years back, we officially rolled out what we call our rules-based approach to marketing. Like I said, that was about 5 years ago. This rules-based approach incorporates advanced quantitative analysis and extensive statistical research using artificial intelligence and programming technology, all to manage our data analysis and provide actionable advice for your decision making. As I said earlier, this is proprietary to our company, something we've built internally. To give you a peek under the hood, this approach uses systemized ordered thinking with thousands of lines of code, as I mentioned, hundreds of tests to eliminate conscious and unconscious bias, with the goal being provide the best recommendations that we can possibly put out, again, in our opinion. So we're looking at every technical, every fundamental factor, all available data, as well as using sound marketing principles to guide the recommendations. Ultimately, the goal is to help customers plan for the unexpected. You look to this blue dot on the right here, plan for the unexpected. Set alternative strategies down in the lower left. Envision different price scenarios up top here. Those are really important and things that we drive through our rules-based approach through the AI technology. But I do want to dive deeper onto a few points on this slide. Protect and capitalize and avoid the pitfalls of outlook. So relative to protect and capitalize, I really think that this is incredibly important to any business, especially dairies. I believe that as a company, it's our duty to help farmers protect their downside, as frankly, that's how dairies end up closing the door sometimes, is by prices falling and not having protection from those lower prices. But not only that, you also likely can't afford to miss too much opportunity on the upside. So you need to walk that fine line between protecting and also being in a position where you can capitalize on upside opportunities. That's a big focus of what we do with the programming, is how do we look at the math, look at the analytics, and again, offer downside protection while making sure that the market does rally higher. We've got opportunity there for the farmer. Finally, avoid the pitfalls of outlook. So that's up in the upper left here. That's the core of why we built the rules-based approach. We believe that you need to focus on strategy as opposed to outlook, as frankly, no one knows for sure where the market's going to go. Everyone has a bias, but again, nobody knows for sure. So how do we focus on the strategy that surrounds the market? Let's look at the data and make decisions from there unemotionally. That's the purpose of the rules-based approach. That's the purpose of the AI technology. Remove the emotion, make sound decisions based on data. You probably do a similar thing all throughout the farm, whether it be your feed rations or new technology you're looking at implementing in the parlor. Again, anytime you can make decisions based on data, I think that that's a good thing for the operation. At TFM 360, advice is fee-based, meaning that it's based on your total production as measured by your 100 weights of milk production. This allows us as a company to pay the proper attention to impartial advice with no conflict of interest. We have a few different models, and I'll get to those on the next slide here, but all of our models start with the same cash sale recommendations, but we have two different models available to use based on your risk tolerance as well as your comfort level. Again, we want this to be something that's manageable for farmers and something that they can implement into their business. We work with our customers for 1 year at a time, and ultimately, our goal is to treat you right, give you more confidence, and help you be a better farm marketer. Again, I know better is a subjective term, but ultimately, we want you to see value in working with our firm. As I mentioned earlier, we currently retain 94% of our customers annually at this point, with what I think was good but not great advice. So again, I look forward to, as we continue to incorporate this rules-based approach in the AI technology, I look forward to what the future holds for that number as we continue to improve as a company. So I mentioned the two model farms earlier. I wanted to highlight those here just to give you a feel for what we all cover. Again, the model farm is where we make and where we track recommendations that we then publish to our customers. Again, this is through our publishing company. We split them into two different categories to better fit into varying customer needs. So just so you know that regardless of your risk tolerance, we can be a partner for your operation. We also provide advice on both Class 3, and Class 4. So what you see on the left-hand side here is dairy fixed for both Class 3 and Class 4 milk. It's generally more conservative risk tolerance, using fixed risk positions only. So that could be, again, a fixed risk position would be something like a bought option, or if you're talking insurance world, it could be something like dairy revenue insurance. Generally, there's less risk, less reward if the market moves lower, and your floors are going to be lower than the market price at the time of the recommendation. Okay, the good news is lower capital requirements as well. For those that have a little more risk tolerance, we have the Dairy Flex, which you see on the right-hand side here. Again, Class 3 and Class 4. That's more for moderate risk tolerance, and that's going to use a combination of fixed risk positions as well as higher risk positions. At that point, we would use no more than 50% of hedges using the higher risk tools, okay? But there are going to be some higher capital requirements compared to the dairy fixed model. So as a reminder, just know that whichever level of service a farmer works with, they may be interacting with any of or all three of the companies that I mentioned on the last slide, being Stewart-Peterson Inc., Stewart-Peterson Group Inc., as well as SP Risk Services. That brings me to Stewart-Peterson Group Inc. And if you recall, that's our brokerage firm. So an important part of being a good marketer is applying the recommendations to your specific operation. And typically, that requires a lot of guidance. So all the recommendations I just talked about that come from the AI and the rules-based approach, the basic question is, what are you going to do with them? So should you wish to use our brokerage firm for this service, here's what that would actually look like. And again, our brokerage firm is Stewart-Peterson Group Inc. We can provide the guidance if you choose to work with. We would assign you to a consultant who understands the TFM 360 recommendations intimately, and they can provide one-to-one support for you. You can choose to work with our brokerage, or again, you can stick with one you already know. I will say that most of our customers, they do decide to have a relationship with our brokerage firm because it offers structure, discipline, and a closer connection to the recommendations. So keep in mind though, this does not mean that you need a hedge account or that you need to trade through our brokerage. Simply when I talk about a relationship with a brokerage company, anytime you're talking one-to-one and getting advice, that's actually a relationship with the brokerage company. So that's what that would look like for you. So here's a little bit more specifics on that. So we have a standard practice of ensuring that every customer is contacted at least every 10 business days. However, we're happy to tailor those communication frequencies to whatever works best for you, whether that's weekly, bi-weekly, monthly. Again, I like to say we'll meet you where you're at in terms of those needs. Also, you have access to us at any time during normal business hours. And I think the big piece here is that one-on-one interaction, that alignment, that customization. Again, customized strategies based on your farm needs. No cost for that relationship. The only cost is if you ever did a trade using futures or options through our brokerage, the commissions are $21 round turn. Last thing I want to cover, the last company I want to cover is SP Risk Services LLC. And again, that is our insurance agency as part of our families of company. A tool that's made a lot of sense for producers lately, the past few years here, has been dairy revenue insurance, also called DRP insurance. So should you wish to talk about DRP insurance and use that as a tool, here's how that could look through our insurance agency. We would assign you to a DRP agent. That would be the same person that serves you as a brokerage consultant, and they understand the TFM 360 recommendations. And again, they can provide that one-to-one support. You can choose to work with our agency, or you can choose to work with any agency that you would like. Again, most of our customers, they do choose to use our insurance agency because it offers that structure, that discipline, and again, a closer connection to the recommendations. And here's what that relationship could actually look like. And I think this is really important because I know a lot of you on this webinar probably are using DRP to some degree. And that could look very different depending on who your agent is and what that relationship looks like. For many people, is simply getting quotes sent over every couple days or once a week or whatever it might be. And I think that oftentimes dairy farmers are being underserved when it comes to their DRP needs. So let me talk to you about what it looks like to actually work with SP Risk Services. The first thing is recommendations driven by our proprietary rules-based approach powered by the AI technology. So that same technology I spent time talking about earlier, we do use that to drive DRP recommendations as well. The next piece is really important is proactive recommendations. So many firms, like I said, they just send a quote and they aren't actually willing or able to give you proactive recommendations. That's a core tenet of what we do. And frankly, I think it's really important because a lot of people think that it's an easy decision deciding when to do DRP. And in reality, there's actually a lot that goes into that. So first, you need to decide, is DRP the right tool to use in the current milk price environment? After that comes the actual hard part. So now you need to decide, how much of your milk are you going to protect? How many quarters out should you go? Is the premium at a reasonable level? Should you use class or component coverage? Should you use the protection factor or not? Again, these are all decisions that need to go into what seemed like a pretty easy decision to do DRP. So again, lots of things that need to be deciphered and analyzed in order to make a good decision. These are the types of insights our team of agents will share proactively with no cost for that relationship. Ultimately, our customers still decide what they want to do, but the goal is that we can help them act confidently as opposed to just getting a DRP quote emailed over and then they have to figure out what they should do. Okay, so I think that's a real key factor is those proactive recommendations driven from the rules-based approach. I also want to highlight that our agents are not incentivized on commissions, meaning that hopefully you can trust that they're acting in your best interest. They're salaried employees, whereas many agencies do have that potential conflict of interest, and many times they'll happily write a policy for you today, even if it may not be the right time based on market conditions. So I think that that's a really important factor to be thinking about. Finally, we have a team of agents. So if your agent is out sick or they're away on vacation, you have the support that you need from SP Risk Services. So we also have operational support staff to ensure that endorsements are processed quickly and efficiently. So a real nice team that supports this entire DRP process. So as we reflect on our legacy in the industry, and by us, I mean our family of companies, and we look forward to the excitement of what the future holds. Dairy is in an exciting time in the world, and I think that there's a lot of exciting technology coming to the front, and a lot of that is in terms of production and also on the marketing side. And I really think that Total Farm Marketing is positioned to continue to be a leader in this industry, and that's what we're going to seek to do. I want to close with a quote, and then we'll get to the Q&A here. The quote is from the late, great Jack Welch, former chairman and CEO of GE. And very simply, it says, if you don't have a competitive advantage, don't compete. So I'll ask, what is your competitive advantage? Most farmers, and I would assume many farmers on this webinar fall into this category. They've fine-tuned their business management. Most also have enhanced and continued to progress on their production management. And frankly, it's probably getting harder and harder to really differentiate there. But I would propose that revenue management is that final piece of the puzzle. I'll call it the final frontier. And I believe that if you can market well and manage your risk well and do things that maybe your neighbors aren't, that's where an opportunity exists. So think back to that data we discussed earlier, that chart I showed with XYZ Dairy. Think about those base recommendations as a way to visualize what revenue management could look like. And think about the impact that that could potentially make on a farm operation. Now that's a competitive advantage and one that I would encourage you to think about. All right, final disclaimer slide. So we'll close with this slide and then we'll get into the questions again. Remember that we talked about futures and options. We talked about ways to manage price risk. There is risk in those tools, no guarantees with them. So consider if they're right for you and your operation. So to wrap up, let's get into some questions here. I need to get to the Q&A box, so bear with me for a moment. We've had quite a few come in, so I will get to as many as I can. Just give me a moment, and then I'm going to hop back on camera here. Let's see. All right, let me get my camera going, and then we'll get to these questions right away. All right, hopefully you can see me again here. Let's see. Perfect. All right, I think we're live. All right, let's get to the questions. So the first one is market related. Basically, the question is, the milk market is really starting to strengthen up. We've gone from about 1650 to 1950 a hundredweight. Can these prices last? Good questions. A couple things that I would say on that. Fundamentals currently are pretty bullish when you're discussing class 3 milk. U.S. cheese is priced at nearly $1.90 a pound, whereas the global cheese price on the most recent global dairy trade auction is up to $2.50 a pound. So U.S. cheese is still at a 60-cent discount relative to the global market. This should keep exports moving well for the foreseeable future, keeping inventories light. Okay, we already know the U.S. cheese inventories are down 4% from a year ago, and 2024 cheese exports were up 18% year over year. The same can be said for U.S. butter. So it's a highly competitive on the global market, and demand should be strong. Also, seasonally, the market is finding a bottom right where you'd expect it to, and it could rally higher into the summer months. So yes, this rally certainly could last, but always be sure to play defense as well. I talked about scenario planning. Trump does have a 90-day pause on tariffs until July 9th. So where do those go in the coming months? Does he put them back on or not? Additionally, U.S. dairy cows are increasing as slaughter rates are lowering, and we're back to producing 1% more milk year over year. So a couple things to keep an eye on, but for now, yes, the market could keep running in the short term here. Ironically enough, the next question was on tariffs. I just mentioned them a little bit. So should we still be concerned about tariffs? The market has really recovered since the first round of trade war talks. I think the answer is yes. Unfortunately, tariffs and the trade war, they're going to be major talking points as we work through the first year or two of the President Trump presidency. Although the fact that President Trump has already negotiated new trade deals, additional investments into the United States, and is now at the negotiating table with China, we're moving in the right direction right now. But as you can see from other commodities as well as the stock market, much of that market uncertainty is being taken out of the pricing. So July 9th is the next date to watch for, as that's when that initial 90-day pause on tariffs will end. Next question was on bird flu. Basically, are you seeing any effects on bird flu, and could that be a reason for a bigger rally this summer? I would say in short, the answer is no. It would appear from recent milk production report data, as well as conversations that we've had with producers, that the bird flu appears to have come and gone, at least for now. Again, it could certainly pop up again down the road, but for now, the market doesn't appear to be watching the bird flu headlines like it has in the past, I would say. News has quieted down. Late last year, California saw a pretty drastic cut in milk per cow as farms were hit with the bird flu. We even saw a few cases pop up in the Midwest, but it looks like it was contained for the most part, and it is in the headline, at least at the moment. This question is in regards to our DRP insurance services, and again, what makes us different from other agents. Great question. This probably came in before I covered that slide, but at the core, DRP insurance itself is the same regardless of where you get it. The premium is set by the USDA RMA. So what's different is how it's implemented. Because we're immersed as a company in dairy markets every day, we approach DRP as part of a larger risk management strategy. As I talked about, we'll help you select coverage that aligns with your market goals, make timely decisions throughout the year, and stay on top of market changes so you get service, structure, strategy, not just paperwork. Plus, as I mentioned, the recommendations are AI driven, providing a more, what we believe to be a more unbiased and strategic approach. Cull cattle. What should producers be looking at when it comes to cull cattle? Well, the cattle market has been on more than a 5-year uptrend now, with new all-time highs hit just a couple weeks ago for live cattle futures. Overall, the cull cattle market has become a much larger piece of the income puzzle for dairy producers. The cattle herd size has yet to show signs of growth, and consumer demand has not wavered dramatically yet. So overall, the fundamentals remain in pretty good shape. However, sometimes the futures market can start to move before the market itself is fully supported by the fundamentals. That's why we call it a futures market. So I think it makes sense for dairy producers to have protection in place against any future movement of cull cows. And again, I'd be happy to run through more details on that offline if you guys have further questions on that. Looks like 2 more questions here is what we'll have time for. Very simply, what do you guys charge for TFM 360? What does it cost? So I mentioned that we base our fee based on milk production. So we believe that paying for whole farm recommendations, not transactions, offers better potential for long-term customer success. So that's why we charge an annual fee, again, payable to our publishing company. Multiple factors affect the fee, but our typical customer pays anywhere between 3 and 6 cents a hundredweight, depending on their amount of milk that they produce annually. I'll tie it back to that renewal rate. We have a 94% customer renewal rate right now. So I think that our customers are showing us with their checkbook that they believe the service is well worth their continued investment year over year. Again, we'd be happy to provide a more detailed estimate for your operation. Just reach out and we can have that discussion. Last one is on cheese prices. Why are U.S. cheese prices not seeing a more aggressive rally with how exports have been? Well, I think that cheese exports have been in great shape for the better part of a year now. March of 2024 was actually the highest monthly total ever at more than 50,000 metric tons. And March of this year, 2025, was the second best ever at more than 49,000 metric tons. However, this does only equate to about 7 to 8% of the cheese being produced in the U.S. So it's a decent piece of the demand picture, but domestic demand is still much more important. That being said, the current spread between U.S. cheese prices and global cheese prices is still in a bullish setup for the U.S. And oftentimes, when it has occurred in the past, U.S. cheese prices have rallied at some point. So again, I'd be looking out for that in the short term here. All right, I think that's all the questions for now. Again, if you have any more, fire them in, and I can always follow up with you offline. But I wanted to wrap up. We're at 40 minutes here by saying thank you for your time today. Certainly want to be respectful of your time. I know it's a busy time of year, so thanks for joining us today on the webinar. I don't take your time for granted. If you have any additional questions that we didn't get to, you can find our website. It's on the slide here at totalfarmmarketing.com. You can call us at 800-334-9779, or my direct email is Brad, B-R-A-D, at totalfarmmarketing.com. Beyond that, just know that we value relationships. We value farmers and the work that you do. Trust that a discussion with our team, it's not meant to twist your arm. It's not meant to trick you into doing something that you don't want to do, but rather we want to ask questions and seek to understand any areas where dairy marketing or dairy revenue insurance could potentially help you or be a source of guidance for you, or if nothing else, validate that you're doing a really great job with what you're currently doing. So we will follow up. We'd also love to get feedback on the content that we covered today. So again, my team will be reaching out in the next couple days here. That being said, thank you again. Enjoy your day.